My name is Eric Wallace with Argyle, and it's great to have everyone joining us today. I have a few administrative details to share with you, and then we'll dig into our discussion. First, we'd like to thank Tradeshift and WNS for their partnership with today's event. They've been wonderful thought leadership partners to Argyle and are committed to providing you with valuable content and a great overall experience. So thank you again to WNS and Tradeshift. We appreciate your joining us today. We welcome you to stay connected during today's event. For those of you who are active tweeters, please follow us on Twitter at Argyle Exec Forum. I also wanted to take a minute to touch on our content neutrality policy, which we've curated based on the feedback we've received over the years from our members. Argyle is very proud and protective of this policy, as it reflects our commitment to ensure the neutrality and overall value of the content presented at our events. We've worked closely with our speaking faculty to ensure that you receive a set of balanced and neutral viewpoints during the session today, and we appreciate our member support of this policy. Finally, and most importantly, please submit all questions that come up during today's event into the chat section of the interface. Following the panel discussion, we've set aside time for our speakers to weigh in on these questions. Before we start our discussion, I'd like to ask each of our panelists to introduce themselves. Jeff, can you please go first?
Yeah, thank you very much. My name's Jeff Hewson, SVP F&A Solutions Transformation at WNS. I'm an accountant by trade, chartered accountant. I've run finance departments, implemented systems, processes in manufacturing and consumer goods, and spent around 10 years of the last architecting GBS BPO transformation across clients. So I'm really passionate about finance, people, process, and digital enablers that bring, for example, this AP and procurement sourcing closer together to drive better ways of working. So really great to be part of this group, and thanks to guest speakers and Argyle for this insightful webinar discussion.
Jonathan, let's continue with you.
Great, thank you. My name is Jonathan Lawrence. I am the head of digital innovation for Tradeshift. I have a background in product marketing, primarily in finance and e-commerce, which is what makes this solution and this concept so fascinating. I've have close to 2 decades working in e-commerce as well as finance, both procure to pay, source to pay, as well as digital transformation of organizations. Very, very grateful to be here today, working with Jeff and Andrew and Argyle, and bringing these concepts and these ideas to you. Really looking forward to your questions as well.
And lastly, we have Andrew Hunt.
Thank you, Eric, and really nice to be here. So my name's Andrew Hunt, and I've got the pleasure of being a head of finance shared services. My background covers small, medium and large organisations in the UK and through other parts of the world. I'm currently employed by Aviva, which is a global insurer, the market #1 in the UK. And specifically within the finance shared services world that I look after today covers the world of money. So we're very passionate about our cash positions, and therefore all of the end-to-end operational processes, like what people will recognise as P2P or O2C, are all part of my remit. So very much looking forward to the questions as we get through the following sessions.
Great, thank you, Andrew. So, to that point, before we dive straight in, we felt it important to explain what the source to pay value chain really means. So the source to pay integration, as you can see, is made up of 3 areas. You can see on the top we've got A, where you've got CPO or procurement officer ownership of category management, source to procure, and then usually the CFO ownership of invoice to pay, where you've got the accounts payable on the right. And when we refer to downstream, so in where you can see the B row, that's the procure and invoice to pay process, and it begins with requisition of goods and services and ends with payment to vendors. Whereas in the source to pay and the more upstream strategic sourcing is added within the P2P to the P2P process to ensure that the best vendors selected and negotiated deals with them to create value for the organization. So where you see strategic sourcing that delves deeper into the procurement process by developing channels to acquire goods and services at hopefully the lowest reduced cost, regardless of the purchase price. So what this means more specifically is that strategic supply expands the scope of cost reduction. And then there's the final piece, which is what we're trying to achieve from all this, i.e. the outcomes. Point C, which is to maximize the source to pay value. And this could be, for example, at the upstream, where there's high visibility leading to increased spend on management to free up bandwidth for that strategic sourcing work, or maybe it's increased compliance, so there's leakage savings through that contract compliance area, or improved by-channel compliance. To the downstream bit that we spoke about, which is where you have a reduced processing cost, where I've seen clients achieve greater than 50% reduction in per PO or invoice cost, expense report cost, supplier inquiries or on-time payments through reduced duplicates, or that queries or the working capital optimization element through the discounts that could have been lost. So that's just a very brief intro into the source to pay, and I hope that's explained it. So yeah, so now open to some of the questions.
Let's begin with our first question. This question is for Jeff. Considering that enterprises are at different stages in their transition from procure to pay to source to pay, what recommendations can you make for teams that are starting to integrate strategic sourcing into their procurement and accounts payable processes?
Okay, that's great. That's a great question. And before I really directly answer that, I think there's a couple of things around what today's post-COVID CFO has a few big things on their mind, right? One is the supply chain disruption. Are they better set up or spread out? How much procuring nearshore or onshore or offshore? How much is just in time, and how much is supply chain dependency? And the second aspect is how much digital are you using? And therefore, what is the level of flexibility in your operating model? How agile is your cost structure? Can you shift from work from home to work from office, or a hybrid operating model? And does your environment allow you to do that? Is there the flexibility in your operating model and the agility of the enterprise to ramp up and down cost? And that's the second aspect that's important. The third, which is always really important, and even more important now, which is about cash and working capital. So when you bring all these three things together, what does it mean to source to pay process? Well, in a source to pay process, it means basically better access to suppliers, more access to automation, whether it's OCR, workflows, payment engines, and that reduces the manual effort. Better analytics, better working capital usage, DPO usage, duplicate payment reduction. And then there's this supply chain factoring component that helps you minimize the cash you need to keep locked into that procurement cycle. These are the challenges that come to talking about when it comes to AP: more efficiency, more automation, more analytics, flexibility in the op model, agility in the cost. But when it comes to supply chain, better access to supplier database and ease of working with suppliers. When it comes to core cash and working capital, again, better analytics and supply chain banking. So then you've got the nature of the supplier base. Is it how ready they are? Is it industry or segment or sector? So if we took retail companies, for example, where it's easier to automate as largely these are goods for resale, they can be automated, Walmart, Amazon, for example. But if you took an insurance, Andrew's world of an insurance company where the bulk is paper and where the supplier bases and transaction bases are different, even if you took the BBC, the British Broadcasting Corporation, renting equipment out on the site for cameras, extras, makeup people, none of these accept e-invoicing. Or take a music company where Lady Gaga's hairdresser charges 3 to 4K per show. If she doesn't get that check, she won't show up. Can you set up a PO or e-invoice for this? I don't think you can. You would write on paper and pay. So this supply-based industry, the industry you're in, they all face different challenges, as well as how flexible you are to deliver that. So, but remember, behind this music company, for example, behind the hairdresser, there's a laptop purchase, there's a payment for IT services, and there will be invoicing behind it. So the question really is, how smart is your AP process to segregate between where exceptions are allowed and not allowed? How do you categorize vendor base? How do you analyze that a hairdresser can't be globally sourced? Housekeeping services, for example, can be. So with that sort of intro, the recommendations then to integrate and make this work. I've done a lot of thinking about this over the years, and this is enabling buyers to really buy the right thing the right way. starting with breaking the buy down into component parts and thinking about the buying process. So you've got the upstream setup, which means you've established what you will buy, the channels of buying the right way, the channels that enable you to buy the right thing, then apply the change management on the ground, which allows buyers to buy those channels. So these three pieces. The problem is people buy source to pay transformations and they seldom think about end to end, right thing the right way, and incentivizing the buying behavior to follow, to buy the way it needs to be bought. If you don't get these things right, you end up with all the normal mess, and you end up implementing digital solutions to try and manage the mess better, rather than the other way around, which is to set the thing up so the buyer works in the right way. You actually eliminate the mess. Now, in doing that, there are a number of things that you have to pull together, which means you need to pull in the sourcing team, people responsible for the data, the setup, the people responsible for managing channels and engaging the business and driving the right behavior. One way, and something that people have not spent a lot of time looking at, but could, to prove the point, is let me show you how much mess poor buying drives. The amount of problems for the buyer, not for the CFO organization. But if you look at the problems you create as a buyer, if you don't buy the right way, look how much easier it is for you as an end user to use the channels that are set up. And if you show the business that analysis, they will turn around and go, well, the reason people buy the wrong way, as we've never really solved by buying the right way. So it solves an awful lot of problems. And by the way, when everybody points to the CFO, buying things being a complete mess, in fact, you should be looking in the mirror and saying, if I have a part to play in the mess being created. So I can't expect people to run a process if I maverick buy all over the place. It's going to be a bit of a mess. So it's really about driving that accountability. So if you break the problem down into these three steps and you put a comprehensive approach around solving for each of these, talking about it end to end, then engaging the business with their responsibility rather than trying to just solve as a CFO, then you can end up in a much better place. And that's, I think, a good conversation to start with, okay, or to have at least. So following on from that, a question to Andrew, actually. As a CFO team member, what is your boss expecting from you in this area?
Yeah, so I think in an organization where we personally have been going on this journey for about 10 years in different ways, so I've worked for different CFOs and each one's had a slightly different lens on it. The following is probably where I've got to in terms of some helpful recommendations. I guess the thing that a number of the CFOs have really wanted to be clear on is points of accountability, making sure that everyone is clear across the business and within the structures that exist within the CFO structure as to who is accountable for the people, the processes, the system, the data, the controls, and to your last point, Jeff, where you were talking about the risks, to gain the benefit and also the controls, where do the risk lies if we don't follow the right things? So we've had to make sure there are real clear points of accountability. And linked to that, obviously I do sit in the finance structure, but through the very early stages of our journey that we went on, we made a very clear decision to partner in the organization along the structure that had procurement or supply chain within it, as some people might call it. So that has in our organization sat under a COO structure. And what we have done around all of the things, whether it's about running the end-to-end processes, celebrating the successes of the benefits, or having difficult conversations about the risk and controls, we've always made sure that myself and my peer, the head of procurement supply chain, have always been in partnership at lockstep with each other to make sure that we're presenting together to show that we are completely in single voice as to what we want to do. I think the third point I would make is around communication. We very quickly picked up that there were two distinct groups of people that we wanted to influence with what we were rolling out. One is very much that senior management. So very clearly is the CFO structure and the FLT that exists, as well as the other senior management structures in the other parts of the organization. And that needed very specific outcomes, measures, metrics, qualitative and quantitative outcomes. But the other end of the spectrum was the users, the people that experience the services that we've now put in place. And that had a very different audience that we had to work with and understand, because it was all about the accessibility and the ease of use, and how close to the experience of using the tools and the technologies, the processes, was it to something like an Amazon. It constantly came up in the surveys we put out, how easy it was to use or not, as the case may be. And the other one, the thing we found was we tried very quickly to do too much too quickly. And when you showed the diagram at the beginning, for me, that really resonated on the basis we decided, after trying to do too much, to start to build it up in stages, to really focus on certain parts of each of those changes at a time to gain the most value, rather than trying to put the whole thing at once. And hence we built up that journey and the benefits and the controls in stages. And that, we found, got us to where we are today, still on a journey, still tweaking and refining, but very much feeling that, we are in a really strong position across all of our parts of our organization, in the different markets we serve.
Thank you, Andrew. We have a poll for the group now, and the poll question, you'll see it appear in just a second. The poll question is your organization self-sufficient in transforming P2P and moving towards modernizing to S2P? We've got 4 maybes. Answers are fluctuating. We've got, give everyone a minute or two to answer here. So we've got 14 maybes, 8 no's, and 12 yeses. There's a little movement on that. Let's continue with our next question, and that question is for Jeff. Governance and compliance processes around procurement don't tend to be very flexible, and approvals can be time-consuming, which can lead to less compliance as people get frustrated and make ad hoc, out-of-compliance purchases. How can source-to-pay systems make it easier to stay compliant and still make necessary procurements?
Okay, thank you. That is a great question, and and it's a really important thing, especially as times are changing. In a manual procurement process, people will have to remember regulations and internal policies related to different categories of material. On the other hand, an automated or more automated source-to-pay system can be designed with regulations built in, I think, to prevent that policy or contract violation before they happen. So just in a recent discussion with a client, this very sort of similar topic came up, and it eliminated, to get to a point where you can eliminate the need for employees to memorize or try remembering the different internal policies of the organization while doing a purchase transaction. So more automated source-to-pay systems help make that buying easier. For me, it ensures a few key areas, or a must-have checklist would be things around master data, where you can actually drive that collaboration with legally compliant and suppliers that you trust, where you can vet the supplier background performance, history of the regulatory or non-compliance, or using different sets of data available. A second part of this would be something around internal collaboration. In each step of that process, where you can use it as an audit trail for future references, particularly when you're in that, if you're responsible for the contract management stage. Then we get into AP when we talk about VAT related compliance. So you can imagine that the thousands and thousands of invoices, the systems will have inbuilt VAT related compliance to ensure accuracy. So VAT classifications and rates, especially, you don't even need to think about updating them in the different countries. They're just sort of in the system itself and updated when governmental changes come through. So e-invoicing compliance is another area where the system ensures that actually each country has different e-invoicing regulation. And so an area here where you could have an e-invoice or a PO flip to invoice, which will ensure the accuracy of the invoice raised, that will help. And then finally, something around workflow that you can set up within this sort of more automated environment, where you can have audit requirements that are satisfied in there, systems that have that invoice and requisition approval workflows to satisfy the different audit requirements. And we've heard in lots of these webinars recently, these systems that will be flexible and adaptive to changes, rules and regs. But we now need to be more and more compliant with data security rules like ISO or IEC or GDPR, etc. So whilst it's a fantastic question, and it's one of those things that are really important. So to that point, Andrew, as an AP head and a shared service centers head, how has source to pay systems or part of those systems impacted here in your organization, or drawing on from some of your experience?
Yeah, so obviously as an accountant by trade, I'm a control obsessed. And when we first started rolling out our end-to-end journeys, I think we focused on the right things, was to make sure all the controls are in there, but we went very much with a very command and control approach. The organization must comply, and if you do, there will be consequences. And we quickly followed. The more we went out that message, the more that drove people not to use the system. So what we wanted to do was to make sure that the controls were enhanced and in place and measured and adhered to. But to balance that, we went along with the approach to also make sure that the business benefits associated with putting these controls in place were seen. What's in it for the user? What's in it for the suppliers? What's in it for the parts of the organization that will be receiving MI on the back of it, or risk-based decisions that need to come of it? So alongside the controls that you rightly pointed out, we also have found, especially in the COVID times that we've experienced in the last 18 months, that very much the focus is always with the controls being talked alongside. What are we doing to make sure that we, as a very large employer, a large organization, a cash-rich organization, are doing to help play small organizations? So we've gone on a real, internally and externally, with our local government and our small suppliers, to make sure we are seen to be paying those small suppliers that are probably in a more cash prohibitive environment right now. We've also, in a very strong period of time where the environment is very an important topic for some, we've also talked about the need for e-invoicing, the controls it brings, but also what it benefits in terms of the environment, the reduction in paper, etc., that comes with it. We've majored on the fact that obviously in difficult times where companies have been in trouble because of COVID, that things like the processes and controls we have in place are designed to help us save money, to help make sure we are here for the long term. Our organization is over 300 years old, and that history we're very proud of, and we want to make sure we're here for another few years. So therefore, making sure we're on top of our cost controls is really important. And that point around the usability, it just kept coming through that we wanted to make sure that the controls were enhanced by the fact that people used the system, so that as people wanted to turn on and use the experience, they were automatically by default taking those controls really seriously. We were losing people to leakage because they were just turned off by our draconian approach. So the emphasis on the softer benefits that we as an organization put forward to enhance the normal controls that you rightly talked about was something that we felt really, really passionate about.
Thank you, Andrew. This next question is for Jonathan, and then Andrew to respond. The question is, are there functions within procurement and accounts payable that are siloed from each other, which in turn negatively impacts your procurement team's efficiency? If so, how do you bridge those gaps?
That actually is a really great question. I think that Andrew and I are definitely going to have. I'm looking forward to Andrew's response as well. But in what we've seen in Tradeshift is really interesting. We've seen that the procurement functionality, the purchasing back office, and AP typically tend to be siloed, unfortunately, in very different ways. They're siloed both by the way that they transact business with sellers, but they're also siloed very often in the way that they even communicate with each other. And that's why we talk so seriously here about about creating that holistic end-to-end sort of end-to-end process, which is source to pay, by simply just digitizing content or digitizing a PO or an invoice. You're not actually solving the problem of creating those levels of communication between your procurement function and your accounts payable. You really have to move from there into a concept of what we might even say would be digitalization, because digitization is just taking a paper piece in your transaction and converting it over to digital, where digitalization allows you to actually readily communicate between both. So you have the ability to manage to your policy and manage to compliance by having a true digital relationship between procurement and accounts payable, which ultimately allows for two and three-way matching more efficiently, and really speeds up the lines of communication between the two organizations. I also see this as connective tissue to the importance of connecting to, as a buyer, connecting to your sellers, and vice versa. By really removing those silos, it enables those seamless, a much more seamless supply chain in general. We've seen that at Tradeshift. We see that in a lot of our customers, and we see that as one of the big critical hurdles to overcome here as we move from a typical P2P to more of an S2P environment. Andrew,
Yeah.
I'll ask you, man. How have you seen those gaps?
If I sort of divide it into just from a finance
with
perspective, covering that audience first, I think the thing we found was in each of the markets and the countries that Aviva was in, it each had its own finance AP function, and there by default was paying all the bills locally. The invoices were remitted locally. The matching activity to the manual activities took place. But we soon found by introducing the end-to-end process that we needed as a finance function to really push towards a shared service, because we were enabling the fact that we could become more efficient, digitized, automated, through the fact that that invoicing route could come into any part of our shared service and be managed and handled and controlled once. The payments could be obviously out the door once, and our outcome measures around how quickly we paid on time were obviously complied with once. So I think it really forced our finance teams to come together as one. So we are now a single AP function handling all of that, which has made the interaction around the cash side with our suppliers much more easier to deal with, because they're dealing with a total Aviva conversation as opposed to Aviva and all of its component parts. I think in a procurement function, we're still in three distinct groups for us. Yes, there's the traditional, I'm buying and selling of your commodities in needing to operate an organization. But we also have our what we call our direct side. So as an insurer, we are obviously buying commodities to help give back to our customers things that they need, i.e. parts for their cars when it gets broken, a new TV if it's failed, or a new carpet if it needs to be repaired, or some legal experience if they have a difficult claim that they are going through medically. That has a very distinct group of procurement and supply chain people that deal with that type. And then there's the third category, which is in the office, where I've got that real low volume, low value. I just need to go and spend, at $10 here or £50 there on, something that I just need in my local office. So in bringing together those three distinct types of procurement or supply chain functions, we were able to put the data of all of that into a single end-to-end tool, albeit with some very different functionality that sits behind it. We found that on the first category, we were able to work with the procurement function to make sure the true end-to-end process was truly maximized. For the third category, that in the moment, we found a card solution with digitized front-end virtual cards or P cards for some markets, had the data coming out of that, but we were able to work directly with the local facilities teams to make sure people were spending things in the right way. But it's obviously at a much more lower value, lower risk. And then on that much more insurance-specific supply chain activity where we are needing to do things for our customers, we obviously worked on an end-to-end process, but it lacked obviously the receipting aspect, because we don't want to go out and ask one of our customers to log into a source to pay end-to-end solution to say, did you receive your TV? So we had to, tweak those end-to-end processes, but still retain the overall governance, compliance, and measures and metrics to say that we were able to fulfill all of our costs that were going through this full end-to-end process, albeit with a few bits of refinement. So finance came together as one. but the procurement functions, we had to find a need to bring them in, to gain them, to get different value, albeit we've still got those different audiences internally that we still work with.
Thank you, Andrew. The next question is for Jonathan with a response from Jeff.
Cool.
Are source-to-pay procurement systems more resilient to external shocks than procure-to-pay systems? How can source-to-pay systems help your business better navigate this very chaotic operating environment?
Yeah. Well, I mean, yes. I guess, yeah, when we really think about it, a smart source-to-pay solution provides those insights that a traditional P2P just doesn't have the bandwidth to cover. A digitalized, and I spoke about this before, the concept of digitize versus digitalize. Source-to-pay gives buyers access to controls on the front and back of purchases that provide those actionable insights that can provide procurement the visibility into pricing trends and purchasing trends, both internally and externally. I think that what I'm saying here is they're more resilient to those external shocks because they have the data to prepare themselves for those shocks. As Andrew was talking about here a couple moments ago, we are all very leveraged by the needs of what our internal purchasers have expected and what external purchasers both. What I like to call the empowered consumer. Those expectations that they have been created and imposed on them by B2C purchasing expectations. I think that by implementing all three elements of a solid source to pay in both the that end-to-end process, you create a more sustainable supply chain. Because you create and empower more of a network effect, which allows for more disruption. But by leveraging all that data in total, you also provide your internal teams the ability to realign spending by focusing more on strategic spend and the outcomes of strategic spend versus the outcomes of tail spend or long tail spend. I believe that the greatest value that source to pay as a whole can really provide is actionable insight. And actionable insights and that data and that intelligence which is acquired from it is always going to win in a disruptive environment. Because I believe that the learnings from that data will more adequately prepare you for future disruption. Jeff, I guess I'll kind of hand that over to you. How do you see resilient source-to-pay systems being more effective than disruptive in disruptive environments?
Then I agree, and I see organisations using the source-to-pay tech services. The ones that are using them are more equipped to face any shocks like this COVID-19 pandemic and other unknown ones coming up. So sort of gone are the days, I think, where there was a front office that directly interacted with a vendor or other third parties like tax authorities. Then there was a middle office that was doing that processing or that back office that was enabling payments or something like that. So today, technology and this speed of processing gives this, and coupled with giving the stakeholder more of this end-to-end view of the process. So looking at not just that front, middle, or back office. I know, for example, here, when we talk to clients through the lens of the Finance One office, we look at the entire end-to-end journey from a transaction, from a stakeholder standpoint, from a vendor standpoint, and you should see it as one integrated process. And then there you have the visibility, right? You move to a platform that gives them this visibility. It enables that end-to-end transaction workflow, Tradeshift, Ariba Analytics, etc., whatever, touching on this hyper automation solution. So as long as there is this seamless sort of end-to-end flow of transactions and getting to that minimal manual checkpoint with that complete transparency, okay, then I think you're in a good place. And these systems, right? They have core capabilities, don't they? We've all read about or used them in some way, and when they're being used by organisations, that will be able to create this value and to be strategic. So therefore, managing a business in disruptive environments, lends itself very well. Whether it's data-driven insights about supplier performance, when you've got all related source-to-pay data stored in it, and you can get access to it quickly in a single platform. You've got supplier networking capabilities, so that you can get access to more international suppliers, so to try and really get that competitive edge. Then you've got this important aspect we're seeing with some of the networking systems, where you've internal, external, real-time issue resolution, to solve it quicker and quicker. So you need less FTEs to really drive that process. So, and then always meeting, we mentioned it earlier about regulation. So always meeting the regulation requirements, and then a facility to access, a variety of how do you fund this supply chain? So access to funding options. So this resilience really will lend itself to disruptive scenarios like we're experiencing at the moment, I think.
Thank you. The next question is for Andrew, with a response from Jonathan. And the question is, an improved source-to-pay procurement accounts payable system is only helpful if people use it. What are some ways that businesses can assess the usability of a new system?
That's a great one. So I'll go back to one of the original answers I gave. We quickly found there's two distinct groups of individuals that we were targeting to work with on our end-to-end process. So in terms of usability, where we found there was one group of important statistics that we needed to satisfy the CFO and that senior management community, and that was to make sure we were really clear about the percentage of transactions going through the end-to-end flows. And what we were able to quickly get into is to say how many contracts were now going through this process, how many suppliers were registered and going through this, how many invoices as a total population were going through electronically end-to-end, how many payments were being made through this, how many risks or duplicate payments were being tracked. And Jeff mentioned just the regulatory side, how much of the outcome-based activity were we complying with regulations that exist in each market about paying people on time, or many others that exist locally. So very much a dashboard was created to be able to give it a very clear indication that we could say it's 100% of all contracts and 100% of suppliers, but today only 99% of invoices may have gone through it. So, we were satisfying that control obsessive organization that I work in. I think the other side of usability, though, applied to the actual consumers, the people that are using the system themselves, and that can be that supplier base globally. It can be the users of the stakeholders internally who are logging on every day to go and buy something. And so we regularly do a survey every 6 months to those audiences to ask their opinion. How's it going? What do they like? What do they want to change? And it quickly builds up a really vested interest of users to express their views, the things they like, the things they hate, and the things that they want to see us changing. And on the back of that becomes a list of small enhancements we tweak and refine. So I guess what we end up having on a regular basis is a list of quantifiable measures and metrics that I can always dictate and talk about how much that usability is taking place, but a list of qualified things where we have lots of statements or problems or issues or positives that come through from users, and say that's suppliers as well as internal employees who have used the system end to end and they're going, I really like this, or when it went wrong, I had to phone someone. This is my experience at this point in time. And those 2 points of data are then played through that we take very seriously and act upon if we see things coming through. But it's those two categories of stakeholders that we've worked really hard to understand the usability for.
It's a really great question. Actually, Andrew said a whole mouthful there. And I absolutely agree that it is, some of the things that are really critical here are understanding what the expected outcomes are, understanding what you are trying to accomplish from developing a source to pay program versus a procure to pay program, and how that integrates with your AP system. I really feel here that a lot of organizations have challenges when it comes to managing change within the organization as a whole. And Andrea did talk about this a little bit. So did Jeff. That it's really critical that you have those functions within inside of your organization who act as advocates for the process throughout the entire change. So you have a group of change managers there shouting from the mountaintop and able to also provide those outputs or that value as you go along. So you're seeing immediate value wins as you move into a source to pay process. A big component of what comes in here is managing your organization's ability to be agile and to work in that agile environment, because you are going to face a lot of challenges, face a lot of theories as you move into a source to pay process, all the way across the entire end-to-end process. You're going to have to theorize. You're going to have to be agile enough to take that outcome and pivot if you need to, and get everyone on board for that next direction. I think that the enhanced, and I spoke about this before, I think about the enhanced data and the actionable intelligence that you're going to gain from that data is going to far outweigh the burden of change. But I believe that that in assessing the usability, you're going to have to kind of draw some of your KPIs back from the way that traditional B2C systems transact and process. As I mentioned here a little bit ago, it becomes about the empowered consumer. It becomes about the people who are working on the system to begin with. Because as we change things as an organization, we move out of a traditional B2C sort of a style and try to impose that on a B2B organization. It really comes down to how, I'd say almost H to H. It's human to human. It's the way that one team is interacting with the next, and the way that they are able to reduce workflows, increase efficiencies, and then measure those against what I would almost call traditional KPIs, which, like I said, would be drawn from more B2C processes, to really get to your outcomes, using the agile process to pivot on those, refine, pivot, refine, pivot, refine. It's going to be messy. Let's be honest. There is no simple way to get to the end here. But that's why I said that it's critical that you have your evangelists and your change managers within the organization to draw the entire process through.
Poll for the group, that'll appear in just a second. And the poll question is, what is the biggest challenge in transforming your P2P S2P function? So let's just take a short time for give people an opportunity to answer the poll. Answer coming in looks like right now a pretty big majority in system integration, tool selection, and capabilities, although executive sponsorship and support is catching up. So the next question is for Jonathan, and that is, along the same lines as the last question, once you've made a decision about what changes to make to your business's procurement system, what are some best practices in training people how to use a source-to-pay system?
Oh boy, that's a great question, because everybody here, everyone on the call will agree, the biggest failure you can have is just non-use. Just a failure to adopt. So once you've made that decision, as I said in my last, I think it's important that you develop your evangelists within the organization and know who your change managers are, so that they can communicate on a regular basis the the return on investment, the immediate value shown. But I also think it's really critical here, and I draw this back from a previous organization that I worked for, that you are cognizant of the training that goes into it and the education component that goes into it. It's all well to tell your organization, we're going through this change and here's what it means to you. But there's a couple of different data points out there that point to an individual's ability to retain information and learned information. And I believe it's that 85 to 95% of all new learned concepts will be lost within the first 30 days without proper reinforcement. So as we're going through this process, it's really critical that we reinforce. So we enable it, we listen, we enable again, we listen again, and we continuously, there's a continuous process that we have to go through here. It's really critical that we also understand that this is not just about, hey, we've got this great new tool. It's no longer about we're going to improve our processes, but as I said before, it's about the digital experience. It's about putting the human to human experiences together. And I believe that by creating a process for transformation, and then really listening to your audience here as you implement these new tools, you are going to mitigate a lot of that potential for failure as you implement a new source to pay system. But it comes down to making sure that, we'll all be honest, nobody likes to listen to people inside your organization, because it's always somebody outside your organization that's the expert, not you. So don't be afraid to employ third parties to prove the value of the new service, and test. Andrew, Jeff,
just to say quickly, firstly, we definitely found there was a tech-savvy digital part of the organization that wanted to have online accessibility to quickly reference things in the moment. There was the evangelical need to have people locally on the ground to talk, shout, be there, walk up to a desk and help people out. But the thing that we never got away from, which we thought was only going to be there at a point of rollout, was having some sort of help desk or advice center. We thought that was only going to be short-lived as we rolled it out, but we found that by constantly having a phone number where people in the moment, a new joiner, a new starter, I'm just stuck, or I'm working from home now, I can't go to someone in the office, where do I go on this? Having an advice center to just deal with the in-the-moment training, help, support, guide me through this, has never gone away. And that thing was only supposed to be there for 6, 9, 12 months maximum. People assumed it was failure demand, and I've still got it going 10 years later, because people still need in the moment, who do I phone to just keep that going? So online, local evangelists, and also a help number to deal with in the moment. 3 things.
Yeah, and I think I fully agree with both of you. The thing around successful adoption is really when that workforce embraces that change, and are you able and equipped to measure that adoption, which is a really important factor, and that can be tricky given the remote work environment to get that adoption up. So I think a standard, and dare I say, digital training approach to achieve by just the basics, but doing it really well, defining the roles and duties of all the individuals involved in the process, and then having standardized training for those roles. So, for example, how to create requisitions, how do I manage the approval process, making sure, and Andrew, to your point, ensure updated process manuals are well communicated so everybody's aware about them and they're easily accessible. Have policies that outline, and the policy thing is very important when we're trying to bring CPO and CFO process together, is have policies that outline why deviation from the process is not acceptable, and there are consequences of doing that. Then always this continuous improvement, simplifying the process wherever possible, feed it back in, and that will reduce complexity and ambiguity as things get more and more complicated. Then you've got this, if we think about the back office, how do you collaborate within your teams? to ensure you've got backup for those for each process. And then finally, I think it was Jonathan, back into measurement of the results. So tracking, measure UX, CX, experience. How do you measure tracking using different performance metrics?
We'd like to open up for Q&A from the audience now and encourage attendees to submit questions using the chat feature. So we'll jump right in and address some of the questions that have been submitted by the audience during the discussion. And the first question I think is going to be an interesting one. How does blockchain affect the source-to-pay procurement process?
Gosh, I can let me just have a quick go, fresh of mind. So, as we know, I think blockchain really is instilling that end-to-end disruption, isn't it, in accounts payable? And it's meant, and the purpose of it, I think, is to eliminate complex and redundant processes, right? So if I take it from a process standpoint and I think about this from what is it we're trying to solve? What is that pain point? Is it a dated ledger system? So often we see them as inefficient, siloed, inconsistent, and they're vulnerable to slow transaction times, possibly errors, etc. And if the document is visible to only one party at a time, and the other party can't make updates until the first party has completed their work. So there are some pain points there. So the digital, I think, with blockchain, which is, if I get this right, it's the digital database that captures and aggregates those records or blocks. So it functions as a ledger so that it facilitates that business process involving multiple parties. So if we think about, and I think the question is, what's the impact on AP or source to pay? And we can think about decentralizing and the process automation. I think it will enable decentralized automation of business processes. Think about smart contracts that are critical to a digital business operation. And we know the business outcomes it's trying to achieve. I think transformation, so really blockchain is a leap of transformation of that AP process. So sharing access to one consistent version, I think, will really reduce those activities like account reconciliation, inquiries. What other impacts it will have will be cycle times will be improved even further from the hyper automation that we're at the moment. From days, imagine a place from days to minutes, and imagine the impact on the people processing in the back office. And something around payments. Every payment managed to a payment term, so you have clear visibility of who's funding what when. Then you've got this audit. I mean, then you go down this: how do you verify and have an auditable layer system to reduce risk for suppliers and customers? Can you gain visibility into that blockchain platform and verify payment statuses, ensure timely payments? So really, it's a great question, and I think it's very much an end state, right? But I think we're starting to see the start of it now, aren't we, with these disruptive tools coming through?
Absolutely. If I could jump in, it's interesting because when you start to apply blockchain to accounts payable, to finance, you do start to gain that transparency into the transactional nature of the entire process. So I see blockchain as enabling as I said before, as really beginning to enable a sustainable supply chain by providing much more real-time access to and visibility to the entire process. I also see this as a solid consideration or component to country compliance, so that as Jeff said, certain elements of country compliance and process can be validated within moments rather than within days, weeks, or months. This will require an adoption of blockchain at a much broader scale by governments, by larger organizations, but we also see the fundamental ability to validate purchases before they're ever made, because you have instant validation of working capital, because it's shared across the community. We personally are kind of embracing blockchain.
Our
a
next
little bit
question
here,
is,
in our
are there any
organization,
better
and looking at
alternatives to
ways that we
letters of
can
credit
find
to
success
selling
with
to
it in the
new
future.
customers overseas? What are the advantages and risks of these alternatives?
I'm just trying to work out. From our perspective, it's what we use today. So we've not found anything that we've not been comfortable at using in terms of letters of credit. So yeah, I'm probably still in with all the bank account experience we've got, we still use that as the main one to use. Great, yeah, they're seamless. Yeah, well done.
That seamless, that it really does make sense. Obviously a lot of different organizations use different ways of CAT, providing validation and understanding those letters of credit. So as you say, you've really not found another solution yet, but as we start to grow and start to get that shared knowledge, the blockchain and other technologies are going to give us.
I mean, it would be interesting to know what the source of that question is, because I remember my days in finance when we were trying to buy commodity from Africa, and setting up letters of credit with some of those joint venture banks have been particularly difficult. But if I had something that could automate the setup of the letter of credit, is this challenge around the setup and cycle time to get it approved on time to make the purchase legitimate, and how do you draw down on letter of credit terms and conditions if you've got multiple letter of credits?
Thank you. Our next and probably last question.
It's an interesting question.
How should organizations be thinking about direct and indirect
actually.
procurement in terms of operating model, driving synergies in platform, and back office support?
Have a go on that one. So just to help, we've obviously talked about the direct side around what we need to do from an insurance perspective, that we still work with the end-to-end processes on, but also the indirect side, which is the global contracts that we want to set up. So we've made sure that we interact with those organizations, carefully across our global structure, but we've realized that they are not the same, to work through. So we've definitely, from a finance perspective, worked with them, but not found a way of consolidating into one, albeit the tool is the same.
Definitely, Jonathan, it's definitely your area, but I've actually had some experience of how working with a global manufacturer, how we've tried to identify the three areas: technology, process, and people, right? How have you tried to identify the difference between, it's going back on buying channels before, direct procurement, what is linked to MRP, zero resource planning, what is linked to non-MRP, what's the size and geography of your organization? Does it have multiple business units within the organization, have different spend and compliance patterns? But ultimately, if we think about an operating model world of actually what the customer demands, a grey box, how do we make that grey box in the factory in a seamless supply chain? Okay, and the end goal of achieving that means that the GBS, or your middle office, back office, will need to then be integrated in order to achieve that. So one useful thing for this is cognitive buying assistance. So how can you make it really easy for buyers to buy? Through guided buying, through cognitive buying, through preferred supplier, lowest cost. Actually, don't go through the time of bring aboard a new vendor when actually we've got 15 vendors that supply that you didn't know, and by the way, it's a lower cost. So there's all sorts of synergy savings in to the bottom line that can be achieved from this. But it's definitely a marry up between back office and help desk support with that tech platform.
Great. Thank you for an amazing discussion. And thanks everyone for joining us today for this fantastic webinar. Thank you again, and please enjoy the rest of your day.